Hello, my name is Brandon Tompkins with RE/MAX Alliance in Fort Collins, and today we're going to talk about rental properties and getting involved in rental properties as an investment. Big question right now is certainly where do you put your money? Stock market's tumultuous, to say the least. Bank CD rates are very low, and meanwhile, an article just in Coloradoan a couple days ago mentioning that rental rate or vacancy rates are 2.5%. There are some property managers out there saying the properties they manage, it's less than a 1% vacancy. Rents are up. So although that appears to be the place, I think we're all afraid to get into something too late, to buy too late, to buy at the high point, and then the market declines and you end up with a bad investment. I don't think that's the case with rental properties, simply because of the low interest rates. The fact that you can buy a rental property and put a 30-year fixed rate on that property under 4% makes it a good investment for the long term. Interest rates are low, but it's not sparking huge first-time home buyers just because the economy is rough and folks don't have the money to take advantage of those low rates like they wish they could. And when the economy improves, I think interest rates at that time will go up. And that is where you could be sitting on a rental property, with a 3.5% interest rate, with mortgage rates well over 7%. And that's going to be a very attractive investment at that time, as well as it will be now. I've written a lot about the interest rates. I've got a blog post that talks about the interest rates. I mentioned that in my last video. But that shows you that, with a $1,200 payment, current rates versus historical averages, you can borrow $90,000 more today than you can at historical averages with a $1,200 payment. So I think just being able to get locked in at that low rate is well worth it. Even if you pay top dollar for a rental today, if you buy in that $200,000 to $250,000 range, which those homes are selling at a premium, but I think you can get away with it still because of the low interest rates and because of the long-term outlook in a rental property. I've done a lot of lending on commercial income properties in my past, and I've seen the effects of interest rates going up on those commercial properties. You don't have the luxury in commercial properties to have long-term fixed rates. So I've seen commercial income properties where their rate goes from, say, 4 to 7%, and the huge negative impact that has on their property because their income goes down, which in a commercial land, that income drives value, so their value comes down, their cash flow comes down. It's a bad situation, and that's what's great about residential. Just to keep it brief, that's one of the big advantages in residential, is it's easier to get fixed financing, and with rates like this, I think it's a good long-term buy. So thanks for your time. If you have any interest and want to kick around some investment properties, there's some tax advantages that I can go over with you, high level as well, depreciation, the interest expense, so forth. I'd be happy to visit with you. My email is brandont@remax.net, and thanks for your time.